Bitcoin just dropped below $70,000, and the data I am about to show you suggests this crash could delay the next bull run until 2027. If you're holding crypto right now, you need to see this analysis before making any moves. Welcome back to the channel where we cut through the crypto noise and give you the real data. I am your host, and today we're diving deep into some concerning Bitcoin analysis that most creators won't tell you about. We're going to examine historical crash patterns, recovery timelines, and what this means for your portfolio in the coming years. Now, here's what is happening right now. Bitcoin has been bleeding for weeks, and we're seeing a pattern that historically has devastating consequences for recovery times. The data shows that every additional 10% Bitcoin drops below key support levels adds an average of 6 to 8 months to its full recovery timeline. Let's start with the math that's keeping institutional investors awake at night. When Bitcoin hit its all-time high of nearly $74,000 in March, most analysts expected a typical correction of 20 to 30%. But we're now looking at a potential drop that could take us below $60,000, which changes everything. Historically, when Bitcoin breaks through major psychological levels like 60,000, it doesn't just bounce back quickly. In 2018, when Bitcoin crashed from nearly $20,000 to $3,200, it took almost 3 years to recover. But here's the kicker: that crash went 75% below the previous high. The pattern is clear when you analyze the data from previous cycles. The 2017 to 2020 bear market lasted 1,075 days from peak to new all-time high. The 2021 crash, while shorter, still took 543 days to recover fully. And each time, the deeper the initial crash, the longer the recovery period. Now, let us talk about why $60,000 is such a critical level. This isn't just a random number, it represents the psychological support level where institutional buyers historically step in. When this level breaks, it signals that even the big money players are losing confidence. If you're finding this analysis valuable and it's helping you understand the market better, smash that like button right now. It literally helps more people see this critical information when the algorithm picks it up. The correlation between crash depth and recovery time is mathematically proven across Bitcoin's entire history. Research from on-chain analytics firm Glassnode shows that for every additional 15% Bitcoin drops below its previous cycle high, the recovery time extends by an average of 7 months. Let me break this down with specific numbers. If Bitcoin drops to $55,000, that's a 26% drop from the all-time high. Historical data suggests we're looking at a recovery timeline extending into late 2026. But if we see a crash to $45,000, which is a 39% drop, we could be waiting until 2027 or beyond for new highs. The reason for this extended timeline isn't just technical, it's psychological and institutional. When Bitcoin crashes deeply, it shakes out retail investors who then need months or years to regain confidence. Institutional investors, while more patient, also require multiple quarters of stability before making major allocations again. Fun fact: 80% of you watching this aren't subscribed yet. If you want to stay ahead of these market movements and get analysis like this before everyone else, fix that now by hitting the subscribe button. So what does this mean for the broader crypto market? Bitcoin's dominance currently sits at around 54%, which means when Bitcoin suffers, the entire crypto ecosystem feels the pain. Altcoins typically crash 2 to 3 times harder than Bitcoin. During these periods, the ripple effects are already visible. Ethereum has dropped alongside Bitcoin, and smaller altcoins are seeing 30 to 50% declines from their recent highs. If Bitcoin's recovery is delayed until 2027, most altcoins won't see meaningful growth until 2028 or later. But here's where it gets interesting for long-term investors. Every major Bitcoin crash has ultimately led to higher highs. The question isn't whether Bitcoin will recover, it's when and how you position yourself during this potential extended downturn. From a macro perspective, several factors could accelerate or delay this recovery timeline. The Federal Reserve's monetary policy, global economic stability, and institutional adoption rates all play crucial roles. If we see rate cuts earlier than expected or major institutions making large Bitcoin purchases during the crash, recovery could happen faster than historical data suggests. Conversely, if we enter a global recession or see negative regulatory developments, the recovery could extend even beyond 2027. The key is understanding that these timelines aren't set in stone, they're probabilistic based on historical patterns. So what should you do with this information? First, don't panic. If you're reinvesting money you can afford to lose and you believe in Bitcoin's long-term value proposition, these crashes represent opportunities, not disasters. Dollar cost averaging during extended bear markets has historically produced the highest returns. Second, adjust your timeline expectations. If you are hoping for quick gains, this data suggests you might need to think in terms of years, not months. This is actually good news for serious investors because it gives you more time to accumulate at lower prices. Third, diversification becomes crucial. Don't put all your money into crypto, especially if you can afford to wait 3 to 4 years for recovery. Traditional investments, emergency funds, and other assets should make up the majority of your portfolio. Finally, stay informed and stick to your strategy. Markets are emotional, and the best gains often come from buying when everyone else is selling. The investors who bought Bitcoin during the 2018 crash and held through 2021 saw returns of over 1,000%. Here's the bottom line: if Bitcoin crashes below $60,000, historical data strongly suggests we're re-looking at a recovery timeline that could extend into 2027. This isn't financial advice, but it's data-driven analysis that every crypto investor should understand. The question you need to ask yourself is, are you prepared for potentially 3 to 4 years of waiting? If the answer is yes, and you can continue accumulating during this time, you could be positioned for massive gains when the next bull run eventually arrives. Drop your prediction in the comments below. Do you think Bitcoin will crash below 60,000? And when do you think we'll see new all-time highs? I read every single comment and often respond. And if you want to stay ahead of market moves like this, subscribe and hit that notification bell so you never miss our analysis. Before you go, make sure to check out this next video where I break down the 3 cryptocurrencies that historically perform best during Bitcoin bear markets. Remember, successful investing is about preparation, patience, and understanding the data. Until next time, stay informed and invest wisely.